Hey, everybody. As anticipated, the Fed met on Wednesday, the 17th, and they cut interest rates by 0.25%, which is what we had all expected. They indicated also that there's going to be two more rate cuts in 2025, probably in that same neighborhood of 25 basis points. So that's all great news. Despite this, on the same day, which was Wednesday, interest rates ticked up a little bit. So I'm getting calls as to how could the Fed lower the rate and mortgage interest rates went up. I'm going to explain that and what it means to you now and into the future. So remember, mortgage interest rates are more influenced by the expectations of investors on things like jobs, inflation, what the Fed's going to do in the future, and less on exactly what the Fed does. The Fed is what banks borrow from each other on a nightly basis. Think of things like savings accounts, credit cards, things like that. So what specifically happened on Wednesday? Well, first of all, there was a hope, I guess, that the Fed would be more aggressive in the future. Well, everybody anticipated the 0.25% cut. They thought there'd be some more aggressive cutting in the future. And when that didn't happen, that ticked up interest rates a little bit. The other thing is inflation is still the big concern, inflation and jobs, obviously, but inflation is at 2.9%. They wanted to see this at 2%. They've been super consistent about this. So they're being cautious as to how quickly they're going to lower interest rates. The third thing is that the market really had already baked in and also anticipated a more aggressive approach, and they baked in this rate prior to the cut. So what we saw the week before this was we saw some really good interest rates, lowest they've been in a long time, and I've got a lot of refinances going because of that. What does this mean to you? Well, first of all, don't panic because there still could be a downward trend. What they're going to want to be watching is jobs reports and where inflation goes. So those are going to be, like we've talked about in the past, those are going to be the two things that we're really going to keep a close eye on. It is still a really good time to refinance. Rates, again, are lower than they've been in a long time. I'm getting lots of clients saving them either with a cash out or just lowering their interest rates. It's also a good time to buy because there's some more inventory right now. And, when there's more inventory, that means there's less competition. And that's good for you as a buyer. So that's all I got today. Thanks for listening. Give me a call. Peace out.